Good morning, happy people. My name is Jay Song. Everything in this video is never financial, investment, or trading advice of any kind. Everything is just for entertainment, educational, and comedic purposes only. I eat red crayons for breakfast. Trading in the markets carries substantial risk. Never trade more than you can afford to lose, and especially be aware against high leverage trading. We're going to be going over our tutorial for today. I originally taught this lesson and I wasn't happy with how I taught it, so I'm going to continue. I'm going to try to teach it again, but this time I'm going to go in a different direction. I said you guys are my guinea pigs to find the best way to share volume spread analysis. It was a very complicated subject when I first learned it, and it took over almost a year to learn it. I remember one time again, and I don't want you guys to have to go through that, so I'm trying to make it in a digestible form and take it in pieces. So here we go. All right, let's continue with our presentation, lesson 15. Volume spread analysis, VSA. This is the main concept. This is a type of filter indicator. We're going to be using it for that kind of purpose. And that means we're going to be using this in supplement with a map. Okay, so when we have a map that we've drawn trend lines, and now we're trying to extract more information from it, this is something we can use to filter. Should we even be looking at this crypto, this stock, or this forex pair at that time? Or should we be looking at something else? So that's one way we can filter it out. Another way we can filter it out is by remembering that for this section, for this time, should we be focused now or should we be waiting for another price? Or price is sitting on a trend line. Is something happening right now or is nothing happening at all? Okay, those are kinds of things that we can get from the volume spread analysis. And we can also use this to help determine if price is going to be reversing, which we're going to be speaking about a little bit about today using volume block. And then as a continuation indicator, we're going to be talking about that within the next 2 weeks, continuing there. It also can be a leading indicator, which means we can start with this concept if all you did was using volume. As I've said before, some people only use volume, and then it's a category of volume, so we can use it with VTA, which is the target analysis, volume target analysis, taught in sword method in lesson 14, I believe it is. We use red for decreasing volume, white for increasing volume. If you have green candles, your volume might be green, and then I'll use the moving average as just white. Okay, so remember, I'm just going to place this once. Volume is the amount of an asset that a security that changes hands over some period of time. Often over the course of a trading day. For instance, the stock's trading volume refers to the number of shares traded between its daily open and daily close. Trading volume and changes in volume over the course of time are important inputs for technical traders, and this is according to Investopedia, I believe it is. All right, number one. The concept of VSA is used to identify price reversals and continuation conditions. Okay, so we're going to be looking for, it's not just one volume block, it's not just one candle, but we're looking for a situation. We're looking for the conditions, and that's going to be really important as we go over today's lessons volume block. In the present, so the continuation conditions or reversal conditions in the present, in the now, which is great because it's a type of leading indicator. It tells us, which most indicators are lagging, so they use like EMAs, exponential moving averages, or just standard moving averages. They are lagging indicators, so they need a lot of data just to tell them something. But with volume, you can actually use volume right for that moment, which without having to look back. Now we're going to be primarily looking back, especially with volume block, but you can use this alone. But we're going to be talking about that primarily in the next week, and then the week after that as we go into both the macro, which is the overall, and the micro, which is more locally. Okay, so I'm going to be showing you that in the slides. Okay, the concept of VSA is used to identify price reversal and continuation conditions in the present using volume activity, which is activity or energy in some ways, when combined with the future or past support resistance areas. Okay, and then just remember, volume can initially seem confusing because price can rise as volume is increasing, and price can fall as volume is increasing. So here's an example of prices falling in the first panel, and in the second panel we can see prices rising. Both situations, volume is increasing. So that's why it can initially seem confusing. We're going to break this down in some simple steps to try to use this like a language. And number 3, remember volume. Remember that volume is only one activity, therefore professional activity must be interpreted using a few concepts. That's why we like the maps of sword method. All right. We all know it would be unwise to be trading against the trend, but it is equally unwise to trade against the big market movers. Here are 3 questions we want to ask ourselves when we are considering a market to trade or to invest. Number 1, these are the questions. So if you haven't wrote this down yet, to start thinking like this, I want you to thinking like this, because this is going to help you understand the importance of VSA and know what you're looking for when you're reading VSA. Number 1, are major market players involved? I don't want to be trading something that they're not involved in, because then it's just, like I always used to use this analogy back in the day about dating. When you're in the dating when you're at the party, right? And you go to the party, but all the cool kids left and all the girls left the party. If you're all just dancing and having fun and you're not observing reading the room, then when the lights come on and it's you and it's just a bunch of guys that are just dancing, you're going to feel really awkward that you've been dancing. How long has it just been us guys just dancing here at the party? When did all the cool kids leave? When did the girls leave? What's going on here? And unfortunately, that's a silly example, but that in high school, you go to the party and you want to make sure that who's there. Okay, because if it's just you and the guys and you're just dancing, then, hey, what happened here? You didn't notice something happened. You didn't notice a change. If you're in a relationship and you're dating and you don't see the coldness come in from the significant person that you're dating, you're going to be thinking that you and her are on another level. So you're buying flowers and you're doing all this stuff and her heart's not in it anymore, or his heart's not in it. And you're going to see things that are not there. And many times sometimes a lot of women become very disillusioned with certain men because they see these men and they say, wow, they're just dogs. They told you their intentions from the beginning, you didn't listen, or they were showing you clues that they were deceiving you and that they had no intention for marriage, that all they were doing is just there to mess around. And so when you go into that relationship and you didn't understand that they're there and they're not serious, you're going to get hurt. Now, why do I say that? Because in the market, it's exactly the same principles, and it's many of the same emotions, which we're going to talk about: greed and fear and panic and elation. We're going to talk about those in just a moment. The feelings are rising up inside of you when you want to get into this investment/relationship. You don't see the clues that the price is giving you, so you don't observe the change over time when it happens, because the change often happens slow, which we're going to see with volume spread analysis. If you remember it like this, you're going to have an easier time remembering it when it comes to VSA, because they work the same. Okay, that's why I'm telling you this. So you get into this relationship with this crypto, you buy this crypto, but if you're only trying to see it from one way because you just want to see the best in that person or the best in that crypto, then it's going to make you biased and you're not going to be able to see the truth as it's happening. The professional activity in volume spread analysis is the thing that reveals to us what is really happening in that crypto. It's like the clues. It's like them telling us are they serious? Okay, so are the major market players involved? If a crypto is going to go up, it needs to have something serious behind it. It needs to have serious players. When people are dating people, you don't just date just to date. You want to date for marriage. You want to have some kind of goal. And major market players, they don't just gamble their money. Okay? They target. They have goals in mind. So they launch accumulation and distribution campaigns, which I'm going to show you in just a few moments. I'm going to show you the slides. But I want you to just think. You can interpret this first statement as, are they serious? Because if the major players are behind it, you know that it's something different. If you're dating someone and they never take you home to visit mom and dad for dinner, they don't introduce you to their parents, that's a big red flag. They're not serious. In cryptos, in Forex, and in stocks, if there's not professional campaigns involved, then it could be just very flimsy. And so when the relationship goes sour and things turn around in the crypto really quickly, Oh, where did it happen from? It's because possibly we weren't reading the clues or understanding what's happening in that zone or that segment. And then when price rises, where was the clues? Generally, there's going to be clues left in the volume spread analysis. So we're going to be talking all about these things. But just so you know, right now, we can interpret this first question as, is this serious? Because the major players, if they're not involved, the crypto's not serious. It may not go up long term. It may be going up now, but if the professionals aren't involved, it's not going to be a long or sustained run. All right. I hope I'm giving you mnemonics in a certain way to try to help your brain wrap its mind around these questions. Number 2, what have the major market players done so far? This can be interpreted as the clues of the relationship. If you've been in a relationship for 6 months, can you use the activity of that person to gauge their intentions either this way or that way in the relationship? In the crypto market, you're going to need to observe what the professionals have done in the past so you can gauge what their intentions are. Are they trying to pass this off and sell it to someone? Or are they trying to buy up more? If they're trying to buy up more and you see an accumulation campaign where they're buying over time, then we can observe that they have goals that this crypto is going to be much higher. If they're getting out of this crypto and selling, and that's the thing that they're always doing, we can assume that longer term, this crypto is going to go lower. In a relationship, it's the same way. If you're not reading the clues, this person has a habit of doing this, habit of doing that. We can live in la la land and pretend we don't see that. Otherwise, we can take it for what it is and say, hey, this is a pattern. This person isn't serious. This person's not going to marry me for a number of years. This person's not going to do this for a number of years. This person, and we can start using that in combination, that same kind of thought process. If we want to get serious, we need to read the clues. So number 1, are they serious? Number 2, what are the clues that they're doing? Does that make sense? Now, why am I saying relationships? Because when you're in a crypto, you often have a relationship for 6 months, sometimes more, sometimes years. So we have to get some of these things. If we're putting our hard-earned wealth down and we're getting involved with this crypto, I want to know, is this a short-term thing? Is this a long-term thing? Where is this going? Silly, right? But it's true. It is very true. We can title today's VSA Relationships and VSA. I'm sure I'm going to offend somebody reading this. I hope not, but it's the truth. Okay. Number 3, what are the major players doing now, today? Okay. Now this is also part of the clues, but it's a little bit different thought. In a relationship, they may have been doing, this crypto may have been going up. This Billy may have been doing all those things and been doing good before, but what they're doing now also reveals a lot of their truth, a lot of their intentions. A lot of us can get deceived in a relationship if the person that we first meet is doing stuff because they can, it's as my pastor used to say, they can do no wrong. When you first get into a relationship, we see everything through a filter. They're so wonderful. And we don't see what actually may be transcribing today. Now, if they did a really good job of hiding their intentions before, we also need to look at what's happening now because there could be a change happening. There could have been something really big happening. I heard a story not so long ago of a man who was really proposed to his spouse, his fiance. He's really serious. Yes, we're going to get in this strong intentions to marry. And then all of a sudden he starts noticing that she starts having all of her friends coming over. She has all of her friends coming over all the time. She's changing her stances on certain issues. Her friends are taking advantage of his resources, of his house. They're not coming when they're not. She's not respecting his house. She's taking her friend's size, and he's, whoa, where did this come from? He missed all the clues in the past, but what he needs to do is make some observations now. And what he did was he ended up deciding, I'm not going to continue this relationship with this fiance, and he broke it off because things were so bad, and that was all the things he read in the now. He was deceived. Was she serious? She was serious, but it was too risky for him. He didn't see any of the clues in the past, but he did read the clues now. Again, this is a silly example, but it's something to help you remember what it is we're talking about. You can love a crypto, and this is why I always say don't fall in love with cryptos. I've been saying that for years. Firecracker knows. I've been saying it for years. Don't fall in love with the cryptos because you need to be able to turn on your cryptos at a heart's beat notice just if the situation calls for it. And when you're in a trade, especially longer term trades, just because past performance has done, this is why I say past performance is never indicative of future performance. Just because the crypto's done this at this area doesn't mean it's always going to do this. So you need to read the clues now, what is happening. Okay, so again, are the major market players involved? Number 2, what have the major market players done so far? And number 3, what are the major market players doing now? All right, everybody got it? Get a screenshot, don't forget it. This coffee's really light. There's no milk. I don't know, something's different about this coffee then. It tastes okay, but it just doesn't have a robust flavor. All right, next. Performing volume spread analysis can help us answer these questions and therefore help us understand where price is likely to go in the future so that we can align ourselves on the right side of history. The two main basic concepts we will introduce are, number 1, how price responds in relation between its overall flow and volume, which is the macro view, and number 2, how price responds in relation between its spread and volume, micro. Okay, so last week when I was trying to explain this concept, I explained some micro concepts, but I remember I didn't explain the micro concepts before explaining the macro concepts. Macro concept is the best way to understand volume. That's really all you need. The macro is a little bit more advanced, and I realize that it's more advanced, so I'm going to spend a lot of time on the macro, and then in volume VSA classes number 2, which is going to be about in 3 weeks, we're going to probably jump more into this class right here, which is going to be the micro view. The best way for me to teach volume spread analysis by far is the overall flow. Number 1, that macro. Okay, so just think macro and micro, like microscope. Macro, just overall. Macro overall. Okay, you got it? So we're going to be looking for how volume is responding to the flow, and then how volume responds to the micro later on. Now micro is going to be more like from a candle specific, and then macro is going to be more of a flow. Now they're both similar and they have a lot of similarities, but there's some primary differences. And as I explained somewhat last week with the compression of the candles, we're going to do things like that, and I'll show you some more of those slides like that in those classes, okay? Both will help us understand what the professional activity is really doing. I will now begin to explain these next content in terms of a few basic scenarios over the course of these lessons. Before we get into understanding the changes in behavior, we will need to understand what normal behavior looks like. If we understand this, we can open our eyes for what is out of place. Okay, so we're going to get into the normal flow and understand what's out of place. Remember that major market players have to hide their intentions. Major market players have to hide their intentions. So during our course today, after we look at VSA, when we start looking at live examples, we're going to point out some of the normalness, and then which is going to be an average increase, and then we're going to what would be abnormal for increasing volume is going to be a very unusual increase in volume, like ultra high. So that's going to be some of our touching on as we get a little bit later. Number 1, important concept number 1. Major market players have to hide their intentions. However, by examining volume, we can see a record of their activities and decode what their intentions may be, and help us to determine if they are in an accumulation or a distribution campaign. Accumulation is when price is being bought over time in a specific range, okay, zone, or track. Range and zone is about the same thing. Okay, we're just looking for that range. It's about from here to here, maybe that would be a range. A zone would be that same kind of area or circled area. And a track could be like along a trend line. If the angle is up like this, I might be reading it every time it's touching that volume. So price may be up here and the volume may not be as important, but I can start seeing, hey, it's being bought up every time it's touching this line. Or if price is on the underside of that line, I could say, hey, price is being sold every time it's touching this line. So we'll use those together. Okay, track we're going to talk about more later in the later parts of VSA course. Distribution. Distribution is when price is being sold, often slowly, over time in a specific range, zone, or track. To hide their activities as much as possible and prevent markets from moving against their own buying and selling, market players must, to hide their intentions, market players must, number one, buy into areas when or where the retail traders are selling, generally out of fear and panic. This occurs primarily during down moves and or on down bars. As price is moving down, if they're going to buy it, they have to buy into that fear and that panic. They also must sell, or begin to distribute into areas where the retail traders are buying. So this is generally at the tops of markets, and they're buying generally out of greed and elation. This occurs primarily during up moves and up bars. As prices going up, sense of greed, which is we'll talk about in just a few moments, and elation, that feeling of contentment at those higher levels, and excitement, I should say, that occurs at that area. They're very much the same, greed and elation. They're very much the same, but a little bit different. All right, volume. So just remember those two. They sell into the buying of the retail market, and they buy into the selling of the retail market. If you guys need a screenshot, take a screenshot now. Volume zone blocking. To begin our reading of volume, we will need to remember to read volume in relationship to the relative candle, which is micro, or candle flow, which is macro. And again, our primary focus is going to be the flow of those candles. So that's going to be the basics of VSA. We can isolate the important areas to only energy centers and volume zone blocks. Okay, so if we're reading VSA, and you say, how do we read VSA? It's simple. To begin, we're just going to be looking at energy centers and volume zone blocks. Here's how they look. Okay, here's an example we did this week from FTM. So on FTM, we had our energy centers. This is going to be a smaller energy center here, denoted in yellow. Here's the center of this energy. It's about yellow. We put it in yellow. Here's the center of this energy up here. Here's the center of this energy here. Now we know these because we can usually easily look for those reversals and read those in hindsight. It's nice. But, and then maybe here's some up here at the top. Those are going to be energy centers. We talk about all these in lessons number 1. Here's a smaller energy center, and here's a bigger energy center here. Here's an energy center here. Once we have one energy center we can use to work with, now we're going to look at volume zone blocks. Now volume zone blocks are blocking out the relative candles and looking at the relative volume in those areas, or vice versa. Looking at the relative unusual volume, whether ultra low or ultra high, and then looking at the relative candles. But either way, we're going to be looking at the relative candles and volume together. Okay. Now here's an example of a volume zone block. If I blocked out that as price is falling here, I can block out these ultra high volume candles. We got volume way up here, and a strong increase on the way down on down bars and closing near the middles, like we talked about in the previous lesson the week before last, lesson 14. Mr. Long, Mrs. Middle. We talked about the hammers, which are like the origin bars. We talked about the railroad reversal bars, and we talked about those shrinking candles, the 5 candle reversal patterns primarily used in VSA in the previous lesson 14. And now here we have a very long down bar followed by a close in the middle, another long down bar on ultra high, unusually high volume. If we were to mark off this actual red volume there, it's on that long down bar. So it's very disproportionate to these other candles. Now the spread is slightly bigger, so generally the candle's volume should only be slightly increased. But in this case, we have a very massive jump from those candles. So this was FTM just this past week. We were looking at FTM on the weekly chart. This was 2022 of April. Okay. And just this last week, we were reading volume in this block. Now, once we understand that something unusual happening in this area, the volume zone block is created by extending that block out. So here we have this block in pink, and I extend it out, and now I know that every time price is in this block, primarily at the extremities, I'm going to be using this information. So I can read the volume data here and maybe at the top, even in the middle of the range, primarily at the core. But this is going to be a common practice for using volume spread analysis, blocking off these areas. Okay, you see me do this sometimes in class live when we're doing chart rooms, but so that's something that we can use going forward. Okay, so if I know I should be looking at the volume here at that first energy center in that area, I know that subsequently every time thereafter, especially if we're getting energy centers in that area, I'm going to be reading what the volume is doing here and here to tell me information about what's happening. Is this being bought up? Is this being accumulated? Okay, so let's continue going on. Here's an example of a Bitcoin volume zone block from last week. Here's as price is falling, we are looking at the volume in this area. So I block out those candles and I can stretch it out. Now I know to read the volume when price comes back in these areas or as it's coming. So about right here, the volume may not be as important to read in the same context as the volume here. So if I see that as we're coming down, a massive increase in volume followed by health, I'm going to know that was primarily possibly buying. Next time price comes back into this block, this volume zone block, I want to read, is there still more buying coming on? So I'll know to look for the next situations. In this case, from a more detailed standpoint, I'd be looking for either a no demand or a still increase in volume, okay, situation. Meaning they either bought up all the supply, after they bought the supply, they buy up the supply again. I want to read what the volume's telling me in this area. Here's another example up here, although I'm not showing the volume, I did block out this area at these two tops to see what the volume was doing. And then as we come down, we come back into the block after that down move. So I want to read, is the energy telling me the same thing? If I see an ultra high volume in this area, and then we come back down to this area and I see less volume in this area, I'm going to say, oh, the supply is being drained. They are actively selling. I would be primarily looking at this first area. Was there a strong increase in selling? A strong increase in volume? It would reveal possible selling. If I saw even more increase, I would say, hey, there's too much supply. We're probably going to see higher prices. If I see a very large no demand situation, I know there was a massive selling and then there was just no more supply. We're going to see falling prices. So we'd want to look at those areas in volume. Again, that was from an example we did last week, but this is how a volume block might be drawn in a chart. So we'll do live examples and we'll read some cryptos like that. All right, let's go a little bit slower now. Volume zone blocking. Number one, look for areas where you have begun. This is how to do it. We're going to be looking for areas where you have begun to observe a strong change in volume and resulting change reversal in price. Okay, so how to perform volume zone blocking. We're going to look for areas where you have begun to observe a strong change in volume, such as ultra high volume or ultra low volume, and a resulting change or reversal in price. So if it was like this area from FTM, we can see, hey, price is reversing around these areas, but we also see a strong influence in that block or a strong change in volume followed by a reversal. So something is happening, and that's where we can start using that. We may not know what it is. We have to read it, right? And especially if you're new, you're not going to know how to read it, but this is how you get started. Look for those reversals, and that's why energy centers are in volume blocks work interchangeably. Okay, energy centers and volume zone blocks. Number two, you're going to perform a zone block. We simply use the rectangle tool with pink as the chosen color. Okay, those rectangle square blocks with pink as the color. Number three, then continue to stretch out the block into the future. The result is you will now have additional other hidden places to observe volume in relationship to the price candles and the flow of price. So even if you don't know how to read it, we can start knowing where to read it. So let's do before we get into the increasing volume flow concept, let's do a live example let's see, let's pick a random crypto, ADA. Okay, so here's ADA, and let's block off some areas. So let me use our tutorial one. Okay, I don't want to delete this one just yet. Oh, ADA is not looking good. Oh, not looking good at all at the moment. I need to confirm all of this, but anyway, let's pick this big topic here. Okay, so here's volume and price is rising. Sorry, this is candles, and the flow of price is that price is rising. Here's our flow. So as we're coming up, the energy centers here. This is a smaller energy center, and here's maybe a larger energy center. Those are going to be our two energy centers. And as we come to these areas, the volume, if we double tap our screen, and if you don't know how to put volume on, once you watch the previous lesson, which we talk about, lesson 14. Now, volume is here on our chart, and we can start looking to see at the energy center change, at the energy center, any relative major volume information. So, for example, this candle right here, we have 3 up bars on an increasing volume, and then we come down, but when we came down, it was a very strong decrease in volume, followed by a slight up move. So a lot of supply at this area, and an increase in volume. Now, these spreads, we'll get back into those spreads another day. I don't want to go into those spreads. But something is happening at this area. If we wanted to block out that area, we could say, I may not know what's happening at this area, but I want to block out those candles on where it might be happening. And then you can stretch out that rectangle. And now we have another area as we're coming up as primarily to the extremities where we might be looking at again. So in this case example, the candles, the block would be about right here. So then we can stretch it out here. So this would be an example of a volume zone block. The rectangle tool is here in our toolbar. Down at the bottom, click our tools, and then we're going to choose rectangle under geometric shapes. Now I hold it down, add to my favorite, and then as we have that rectangle tool on, we simply are going to come to our toolbar. Either it's going to show up, or we can double click, and this is going to show up. Here's how I do it. Border, I choose the pink color. Okay, it's about right here. So at border, I can make that border thick, thin, or thinnest right here. But I like to leave it thick. Then for the background, I turn the background off so it's not blocking or coloring my candles. Otherwise, I won't be able to see my candles. Now, if I want to adjust an existing candle, I can click on the little toolbar here, or again, just double click the line. But either way, it's going to take you to this menu. So if my background is checked, I can't see the candles. So I want to turn that background off. Okay? I don't need the middle line, okay? But just that. I can type something right in the box. Volume zone block. And I can place this on the right side, the left side, the middle, or the center, and then I can send it on the bottom or the top. In this case, I'm just going to leave it on the bottom, someplace that's clear, and on the right side, and I'll make the text pink as well. I'll make it bold. If I can't read it, I'll make it bigger. Got it? That's how you do this. Okay, so I hope this video tutorial is helping. That's how you're going to do that. Okay, next, let's continue on with our presentation. Okay, increasing volume plus flow. The first major concept to observe is increasing volume in relationship to the flow. This is the primary focus for the basic tutorial of VSA, increasing volume. Price, remember, price can fall as volume is increasing, and price can rise as volume is increasing. So both situations can happen as volume is increasing. The increase in the volume is telling us an increase in energy or activity. All right, increasing volume plus falling flow. All right, so what does it mean when we see a strong increase in volume, yet we see prices falling? Let's talk about it. Increasing volume during a down move highlights possible professional activity to the downside, possible professional activity to the downside, but unusually high volume in an area can signal a possible accumulation campaign in this zone block area. Okay? So if price is falling and I see there's an increase in volume, but it's just slightly, that would mean, hey, maybe they're shorting, maybe some people are taking profit, maybe there's some energy to keep it going. But then if I see an unusually high volume, but volume is very spiking, as we're coming down in that area, it could highlight a possible accumulation. Now remember, why is that? Because, as I mentioned earlier, that professionals must buy into areas when the retail traders are selling generally out of fear and panic. That's when they have to enter. It occurs primarily during down moves and down bars. Okay. As I see, if I'm going to be seeing price fall or coming down, I have now the situation for down bars or conditions of down bars or down flow, down move. It's the same. And if I see ultra high volume or unusually high volume, it could be that they're starting to buy. Okay, they're starting to accumulate in that area. That means they're starting to increase their holdings. Now remember, just as a side note, they cannot buy all at once. If they buy all at once during that down move, then they'll raise prices against their own self. So they have to do it to hide their intentions during times when everybody's panicking and selling. They're slowly buying. And they also have to buy it in chunks over time. They can't just put one move, because sometimes they'll push everybody out of the market and push price into another zone. So they have to try and keep it in these ranges, and that means they can't buy everything. They have to just buy slowly. Okay? It's not get too much attention at the supermarket. Those ultra couponer people, they have to use only a certain amount of coupons at a time. They have intentions to try to squeeze every dime out of that establishment of the Olson's Mercantile, right? They're trying to buy up and do their transaction, but they want to squeeze every dime. But what they're going to do is to prevent everybody from getting upset with them and revealing that they're in line. They're just gonna buy a little bit here and there with their coupons, and they may come back to the same store as long as that price is that price over time, over the next week, multiple times. Okay, that's a silly example, but that's how it works. Decreasing volume in a down area or a down move highlights possible lack of professional activity in an area, and the lack of supply or bearish activity. So as the price is falling, but there's no more supply, as price is falling, but there's no more supply in that area, I don't want to use the word supply yet. As price is falling and there's a decrease in volume, there's no more energy in that area, it could say the professionals are not involved. They don't want to get involved. And sometimes that can be a time when price is going to reverse, because if it was falling because there was selling pressure, people were shorting it, but then there's no more major sellers selling it, then sometimes price is, what they do is called corrects or reverses, meaning it's going to still fall possibly, but it just can't fall anymore because the professionals are not shorting it. It's too expensive. They want to short it at higher prices, make the money coming down. They don't want to sell at the bottom of the market. That's not what they do. And they sell at the tops of markets primarily. So as it's falling, if we're seeing it falling, but yet the professional energy, the volume, is decreasing, it could signal that there may be a reversal, okay, or lack of supply or lack of bearish activity, okay. This can help signal a reversal. So this is the differences between an increasing and a strong decrease in volume. Observing increasing volume over time in a volume zone block as price is falling can help us determine if price is being accumulated slowly to hide its activities. So just to reinforce what I'm teaching, if we have a volume zone block, and let's use one that's falling. Let's use a falling example. That I like that FTN. Oh, we'll use this example right here. Just say I have this volume zone block here, and I can see the volume really ramping up here in overtime. Let's see if I do. All right, here's a perfect example. So ADA from September of 2022. Price is falling, volume is increasing. We fall again, volume is increasing. So now I'm blocking out the areas when I'm observing this is happening. So it's primarily about from here to here. Now I have this volume zone block, and I'm just going to type in here for the purpose of this question, volume zone block. or VZB, and I can stretch it out here. Observing increasing volume over time as prices falling can help us determine if price is being accumulated slowly to hide its activities. So this alone may say, hey, price may go up shortly, temporarily, depending on the time frame. This is a weekly chart, so each one of these candles is 1 week worth of time. But if I see after drawing the block, now I know to look in this area, I stretch out this area, and I keep seeing that every time I'm in this area, a strong increase in volume, it could tell me they're accumulating. Now I know they accumulated once, and then of the original flow, the flow was broken. Health, price came, sat down on sword cut, rose again. We come back down to the extremities of the box. I want to be looking again as price falls here and as price falling here. Is the volume increasing? Because if it is, that means it's probably being accumulated in this price zone by professional monies. If I don't see that, it may be a shorter-lived move. Okay. By the way, let's go to a smaller time frame just to simplify this a little bit further, these last two areas. Okay, so here and here I'm going to be looking. As price is falling, we're seeing the candles, the 5 candles we talked about from last week, closes near the middle. Okay, we can observe where the health may come in. The health may have to start coming in when we're on this side of this trend line. The health may have to come in as we're near the extremities. But the volume is going to be a biggest clue about what's happening. So I got about a week's worth of falling candles. The spreads are slightly increasing, and then here we decrease. The volume is ultra high volume on that down bar, followed by a move to the side and a slight move up. So this would be read in context of the previous volume, which was that increase here and this increase here. So as we come back up, are we still having an increase? Yes. So what does this tell me? It means they were accumulating and accumulating in this area. We should expect, therefore, prices to reverse or change course into a higher area. If the whole thing was simplified into simplistic energy, the flow of price would be that down move, this up move, and this down move here. So we can therefore draw our next point of health, and we'll look for, or in this case it would have been round structure. We would draw some trend lines, and then we might look at here for a sword cut, and we might simply just look for here for health. So if I was able to connect these two structures by that single trend line here, this one, then I might look for the health to appear here. If I saw accumulation happening as the event just before the health, I'm going to be bullish to a time in the future. And then we can do VTA targeting system for this area here to find a target or to find a top, or when we're going to get out, when we're going to take profit, what's going to happen next. Question: can we use can we use the volume zone block, the VZB, to identify this future area later on? Yes. The answer is yes. We can stretch it out again, and I now know other areas by which I want to be looking for that volume zone block. So I already identified it's being accumulated, again, primarily at the extremities here, and we'd have to read this fourth area. And then if we get back down to here, we can also possibly observe, is it going to be accumulated? Most likely. If price is in an area where there might be weakness and we may be falling, I might look for it to fall to these same areas where it was being bought in the past. Here, was it here, 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 and then we'd want to look here. So this was one last down move, just as a quick example. Here's the down move. Was there an increase in volume? The candles are all right, but we'll talk more about those as we get back to the micro. Was there more increase in volume on those down bars? Yes, look, another increase in volume. Strong increase on the down move. Now, and then just the candles is very slightly, but the ultra high volume bar reveals a lot. One on its own might be easily missed. However, if we see a pattern emerge over time, then it paints a stronger picture. Does that make sense, my friends? If we see a pattern happen after we draw the zone block, then it helps paint the picture of what's really happening. So is ADA being targeted longer term at these price levels around 23 cents to 34 cents, you bet you. You bet you. One we might miss, but multiple ones, especially if they're happening in the areas where we first identified that block. And that's the power of these volume zone blocks. That's why for the past few Saturdays, you guys have been noticing me drawing some of these blocks, and I just block out those areas. This is what I'm doing, and this is how we do it. So now this crypto is at 36 cents. I know to look at it again primarily once we start getting maybe closer to 28, 24, somewhere around towards the edges. Okay, make sense? Bye, Carol. So Carol says I have to go. I'll be back. Okay, have a great day. Now let's go to the next one. Note. Remember, to hide professional activity, price flow must be bought during the down move. Remember, if they're buying, it has to be during the down move, down flow. All right, next one. Increasing volume during an up move highlights possible professional activity in an area. This energy is the same. This energy is needed. Too much unusual high volume may signal a secret distribution campaign. Okay, an increase in volume, not so much, that's not the end of the world. As prices going up, it could be more activity, more buyers coming in from the retail market. But if I see an unusually high volume increase as prices rising, see, this was volume rising, this could signal a secret distribution campaign, and prices may reverse at this volume zone block over time. So I want to use that volume zone block over time. Does everybody get that? So this is that's the difference between when price is falling, the flow is falling. This is when the flow is rising. Okay. Let's start there and let me show you what I mean. Let's have another crypto example. Let's see. Actually, let's use the same ADA. Okay. Here we are as price is rising, right? So price is rising here from 2023 of November to 2024 of January, February, somewhere around there. Price is rising, right? Can we agree? Price is rising here in these two areas. What would it mean if, as I'm going up, I see this ultra high volume? Because usually that ultra high volume is going to happen at the very bottoms or close to the very bottoms, and the high volume is going to happen at the very bottoms as price is falling, and as price is rising, it's going to happen at the very top. This usually indicates the professionals are up to something. So let's look at the volume. Let's see if I can isolate this in a simplistic way. Let's see if I can turn my candles to Heiken Ashi to simplify. Okay. So I'm just going to use these simple Heiken Ashi candles to simplify the flow volume. So as I'm going up high up here towards the top, I see this very strong increase in volume here. So I might block out that area and say, oh, we might start looking in this area because there's a strong increase in volume around these candles. So that might be my volume zone block. And then as I get back to the tops here, sorry, let's stick in this area. I come down, price comes down, it comes up one more time about right here on a very strong ultra high volume bars. I said that might be interesting. Is there something going on in this area? Now we come up again to a much higher area, and the volume as we're coming up higher is giving me, it looks like shakeout type candles, number one, and then a very strong small spread. And the candles volume, which was all here, is now being ultra high in these areas. So I'm thinking to myself, are they doing something? What is happening? So I have 1, 2, 3 areas in this close or in and around this block with a few ultra high volumes. Is there a selling campaign? Maybe. In my opinion, it's not that clear, but I would say that something is probably happening. We may want to observe. This might be, there's a few things this could be, but if it was a strong, just say it was a really strong up increase volume push. I don't want to use the word push. If it was a strong increase in volume, I could say, what if they're really dumping their holdings? Now, if I see a very low volume or just average, I can say the second part, and this is this. Decreasing volume during the up move highlights possible lack of professional activity in an area. Price may not continue this way much longer without energy from the professionals. This is the second paragraph here. Now, what that means is, look at this area here. We already saw that price was being professionally accumulated. I pointed that out just a few minutes ago in all those increases in volume. And we start going up and volume's going up. Okay, could be the retail traders coming in. And then we start getting to the end and we see this big volume push, but we're going sideways. Maybe the retail is getting out. We volume zone block on it. And as we come up to this last move, we have another move that's in this area. Here's one, here's two. This second wave of energy, does it have the same as the first one? The answer is what? Let's see if anyone knows the answer. Okay. Again, now we're going to get into lack of activity in the same area. We have this strong push in volume and then followed by a sideways movement and a downward movement. Then we come back up to this wave, but look at the volume energy. What is the volume doing in this area compared to what it was doing before? Do you guys notice? Can anybody see it? Just take, I see it. I want to see if you guys can see it. Do you guys see the difference? Anybody suspect what that might mean? I gave you the answer on the slide just a little while ago. Okay, nobody? Okay, the answer is lack of professional activity in an area. Okay, so they were buying actively here. Are they buying up here? No. And that may mean, therefore, price may not continue this much longer without energy from professionals. Now, if the professionals are really doing it, they're going to help try to push, which we're going to talk about later on in a future VSA part. But sometimes they want to push it into higher new territories. But if they're just not playing the game, then sometimes price will correct and fall until it's being accumulated again. Okay, and then it will be the second accumulation campaign. It could be being accumulated here. I didn't look at it here. But what we can see is sometimes there's an active selling campaign, and sometimes just them not being involved, markets will fall. Okay, so this is the concept to wrap your mind around. Apart from accumulation in a buying campaign, if price is rising, it could fall if it's being targeted to fall, but it can also fall without professional activity or support. Does that make sense? So if you observe, hey, we're getting to new territory, but the big players aren't playing, how long is that going to keep on? You can start looking for, in that case, weakness. So if this is the flow of price, the energy centers being here and here, draw a trend line, your weakness is here. So that's when you can start trading to the downside. So if I'm reading this, I'm like, price is going up, but the big boys, I'm saying, whoa, it looks like the big players. And I say to myself, this ain't looking good. It looks like the big players up here are getting out. And then you come back up and you say, ooh, they're not even in. And then you see the trend line, oh, the map is showing weakness. And maybe it's along a track where there's a monthly key angle up here. You can say, I don't like this at all. I want to short this. I think ADA is going to fall. You're probably going to be right. Okay. Now, if I saw, again, that ultra high volume increase, I would say, man, this is being actively targeted. They want to bring prices down. I'm probably going to be looking for a lower price. Okay. By the way, is ADA coming down at the moment? It has been. And as we've come down to this area, what is the volume starting to do? Ramp up again. Ultra high volume on the down move. Closes near the lows. Closes near the middle. Twice. What is the volume block? The volume block was all back here in this same area. So as we're coming down to these areas, we can see the increase in volume again. So this could be the distribution, the accumulation campaign again. Is price probably going to fall? I don't, at the moment, longer term, it's being targeted. So I think ADA is going to do well over time. That means we're probably going to get past this line in the future. Just so you know. It looks like it's being accumulated. All right. Now, let's finish up for today because I'm throwing a lot of stuff at you guys. Observing increasing volume over time in a volume zone block as price is rising can help us determine if it's being distributed, meaning they have to pass it on to all those people who are experiencing greed and elation, slowly hiding their activities. All right, fear and panic. This is the last things we're going to do, and then I'm going to do one more live example, and then what I'll do after that is I'll show you guys the USDT.D and the total 3, as I promised on Monday. Fear and panic. These emotions, the emotions one experiences in the markets are almost identical as one feels when gambling in a casino. Of these two emotions, fear is more easily experienced and managed and overcome, because we all feel that fear. Panic, however, must be killed, squashed, and destroyed. Elation and greed. The emotions one experiences in the market are almost identical as one feels in this casino, the same as in elation and greed. When you're in the casino and you're playing and you hit it really big, whoo, you feel that excitement. Well, that's great. You feel elation. That's fine. Everybody feels that elation. You feel that rush. It feels good to win big, right? When you get the victory. But greed, of these two, elation is easily experienced, managed, and overcome. But greed must be killed, destroyed, and squashed. So we panic sometimes when price is falling, and greed starts to overcome us when we start moving up. I wrote this about elation. When a market moves up, the retail traders often chase candles and prices. Elation is a powerful emotion, feeling good after a big win. It makes them feel overconfident, often staying in too long, as if they could never lose. This is the danger of elation. And though it may be time to take a profit or take profit when it becomes time, it makes them feel like they can never lose, though it may be time to take profit when it becomes time. And though it is wise to see both sides of the market story, elation often blinds us to any storm that may possibly be on the horizon, and therefore we become biased and we can only see the upside. This happened in the housing market in 2008. I was in the investors club, and I was at a praise and worship meeting at the time. And I had said, they were like saying things about the housing market. I said, yeah, but what about when the house prices fall or the market falls? And they said that, and this is what, and I quote, they said, that doesn't happen. And you would know that if you came to the investors club meeting. I think it was just later that winter. I think it was later in the fall or in the winter is when the housing market crashed in 2008. And it was really bad. And a lot of people were left stuck upside down with very bad prime mortgage loans that were inflated and was increasing over time as the value of the homes was decreasing. And that was a slap in the face because they thought they could never lose. And that's that feeling that when you're making so much money, you start feeling like you can never lose. It's the same elements, that's why I said, happens in a casino. Greed is an unhealthy, abnormal elation when one is overcome with desire for more. When a trader experiences greed, they buy when they should not, usually at a top, taking risky trades. These emotions cause us to not wait for basic candle closes or when that candle is supposed to close. It causes us to get in too early before we have confirmation about a trade. It causes us to double down on trades because we're like, yeah, I'm going to win. And then we double up. It causes us to count our eggs before they hatch, so to speak. And we're just only seeing the potential profit. We don't see any of the risk. We don't see that we could lose. And not wanting to miss out on the gains or the big move, they act without sound judgment. The market moves up. The retail traders often chase these candles and prices. This causes us to forget about stacking the odds in our favor. And we do that primarily by making a map, by reading as much data as we can about a certain crypto, the area, that price zone, the structure, reading the VSA, reading the RSI, reading whatever indicators you're trading, just stacking the odds in your favor. You're no longer trading based on sound judgment and data, you're trading based on emotions. And greed is that elation in an unhealthy way. All right, and then I spoke again about fear and panic. Panic is an unhealthy, abnormal form of fear, and is when we are overcome with fear or loss. When a trader begins to panic, it causes them to sell when they shouldn't be selling, usually at the bottom of a market. It causes them to sometimes leave sound, strong, bullish trades. These emotions cause us to not wait for basic candle closes and to get out too early, and reverse our positions, often sometimes without reason, causing us to lose sight of the major story of the trade. We stop reading, hey, there's being accumulated at this point. So we're like, oh, it's falling, I can't see. And we didn't do our homework and saw, wait a minute, it's being accumulated by the professionals. See, remember, the professionals, the banks, hedge funds, institutions, syndicate traders, they can play the long game. They don't mind playing the long game many times over years. That's why if you trade the story within the story, if you're trying to intraday trade, you want to find what that major story is and then jump on the bandwagon. So if you know it's being accumulated in this zone, when that zone primarily you shouldn't even be thinking about shorting, and you should be hunting down moves so that you can look for the opportunity when to buy. If it's in an up move, and it's being distributed over time, you know the long-term plan isn't to short, and you're trying to day trade, you might want to be only looking at taking shorts. So when price is rising, you're sitting out of the market, and then when weakness appears again, you're entering in the market on those shorts. That might be a wiser strategy for you, just to jump on the bandwagon of the major players. Wanting to recover some loss, panic causes them to act without sound judgment as the market moves. Retail traders often short these large down candles and moves, forgetting to stack the odds in their favor and using the available data and analysis. Okay, so you got to be careful panicking at the bottom. You're like, oh, and then sometimes they're shorting just as the bottom's already the bottom's already in, and you shouldn't be shorting at that time. Okay, so panic, we have to squash that. Now everybody's going to feel fear, and it's scary, right? When you sometimes see these moves in the markets, when price moves in a direction you don't want price to move. But panic is when that's overcome you and you're not thinking correctly. All right, we're going to get into micro in the next 2 weeks. So let's do a live analysis. Let's have a crypto, maybe from one of our request lists. Let's see, do they have any requests here? I think we finished all of our requests. If you have a request for a crypto, I think I only have one.
Shimmer.
Shimmer? Yeah. Shimmer. Okay. We're going to be using this in the form of VSA. Shimmer.
Short name is SMR.
SMR. Yep. Here we got one on MEX. Yeah.
Yep.
Now I have these wonderful volume candles, and I'll use them for today since we're talking about volume. Volume candles shrink the candles this way when there's lack of heavy volume, and when there's heavy volume, it makes the candles wider, so it's just easier to spot. I can see that we're falling in this area. We have the flow of price is quite simple. We come down, we come up, we come down, we come sideways, come up, and then come down again. And it's very easy to see from the volume spread candles that we have a very strong down move, but the down move has candles that are immediately closing near the middle and a sideways. So again, we have a down move with candles that close near the middle moving to the side on ultra high volume. So we have ultra high volume down bar here. So there's the volume. Okay. If I was looking this on regular candles, you will see this. Okay. It's a little bit harder to see. And this is just a tool. You're going to see me introduce some more volume tools over the course of this VSA tutorials. A down move, ultra high volume, followed by a sideways movement and then an upward movement. Now, this could be the start of some buying that is happening or in this zone. So let's block it off for number one. So I'm going to block off that candle, and then we're going to stretch it out a little bit. So now, primarily at the extremities or near these and near the closes, I'm going to be paying attention to volume. Now the next bar, we have this down move here, but look at the close. It's near the middle again on very high volume. So this could have been a supply check on the downside. This could also be some of the accumulation happen. Now, just so you know, which we're going to get into a little bit, if we have ultra high volume here, yet we just go to the sideways, and as we come back down for this smaller down movement, if we have very low volume, this could have been accumulation, some buying or accumulating, followed by no demand, meaning there's no more supply in this area. So price is ready to move. There's a markup. Before that happens, sometimes there's one more supply check or sometimes multiple ones. In this case, they push prices down really quickly to see what type of trading is happening in this area, and it's very high. So there's a market that's still down here, or I shouldn't say it's super high, but it's high enough. So there's a strong market that's still down here. Now the next bar is an up bar, and we got to read these in context. Now normally on its outset, we would look at this bar and say this bar has a close near the middle followed by a sideways movement. So maybe that's some selling. And while that may be true, I want to read it in context just compared to the last bar. Remember, the last bar was supposedly supposed to be a down movement or a down bar, but the close was all the way up to here. And that could mean that as price was falling, the professional said, "Ooh, that's a great deal." Imagine, for just a moment, I'm selling Xbox, right? I'm selling an Xbox. And I say, "Ooh, for the next 2 days, the Xboxes are going to go on sale for only a nickel, and it's legitimate. You're like, oh my gosh, that might get bought up so quick, very quickly, and it may even make a buying surge happen. So as it's getting bought up, we see the price come back to normal until the supply goes. There's no more Xboxes at that supply price. And then there's a buying surge because everybody's buying Xboxes now. I got people interested in Xbox. They're talking Xbox. They're, oh, you got an Xbox? Oh, I didn't got an Xbox. And they may be even willing to pay a higher price for it. So sometimes we will actually see back-to-back pairs because it's being bought plus being bought so much until it finds a nice balance. So this ultra high volume bar here, coming right from the bottom, I'm going to be reading these almost as a pair. Now, if it was at the top of a long rising market, I might read it in context. To confirm this, I'm just going to zoom down my time to a daily chart and see how many candles it really was. In this case, I can confirm it. We were just one day trading all of a sudden down here, and the next candle was the one that went up and came down. So it wasn't just like a slow rise and then we climbed up to the top. No, we just went right up there. So all this energy from that large candle is actually part of this pair. It's probably a lot of buying, too much buying coming in the zone block. And so therefore, I would say it's very possible it was starting to be bought here. Starting to be bought here, needs to cool down, needs to find a price where it can cool down. And as it comes to the side, there's no big selling campaign that I observe happening. Now, if anything, if there was a selling campaign, it might be on this third candle on the daily chart, which is this one. It's an up bar followed by very high volume, and the move is sideways. But as far as it being targeted, and this is of a concern, it is a very high volume, but it may be being sold right here. Now, it's very possible that if this candle was just one accumulation, I'd want to see more accumulation in this zone. If I don't see it, it might be just, hey, it was being bought and they could be taking profit. So bought, taking profit, therefore the trading zone, this is the next volume block for some of that selling, if it was selling, somewhere in this range. So as price comes back up to this area, I might be observing what the volume's telling me here. For the selling block and for the buying block, it might be along this track. Ultimately, if anything, we're still in a downtrend. I want to see more areas of buying before I start thinking about going up. And I also want to see the structure broken before I start thinking about it going up. Now, how can we put all this to completion? Let's see if I can do it in just 1 minute. Again, here's the flow of price. The smaller energy centers here and here, I can draw a trend line. If I drew that trend line connecting these areas to this area, I might say I'm not looking to be bullish until these prices. So I need a breakout from here, 003. I might want to put an alert. Okay, it's just clicking on my line, putting my alerts on. You guys learned that from previous lessons. And then I also want to see, as we are coming down now, as we're down again, I want to see another buying area. I want to see a strong increase in volume. Otherwise, I want to see a very low demand and then a health. Then I can say it was accumulation, no demand, they bought up all the supply, and now it's ready to rise. So we are not in a new area of health. We're still underneath this trend line. We are also need to observe, is there being accumulation happening? So the last thing that's happening with this crypto SMR, we have down bars followed by closes near the middle, ultra high volume. I am a little concerned that they have very high wicks as well. Then we come down again on very high volume. So this is telling me what? It's very possible there's some buying that is starting to happen. Now, is this in the buy block? Yeah, remember that buy block was originally here from this one. So we stretch it out. Are we still within the range to see this happening, especially primarily near the lows? Yes. So is it being accumulated? Possibly. Because that's where we want to see some of those ultra high volumes. On the down move, this is a down move. On the down bars, we want to see those types of candles closes near the middles or near the origin points. Or we want to see a lot of those railroad tracks. We do see that. What are we missing? Structure. Okay. If it's being bought, it's possibly being bought. But we still need to be here in these areas on top of this trend line. We need a breakout. Now, if price just phases through, it's going to happen sometime before November 8th. Okay, we can see the time at the bottom, November 8th. If all price did was stay the same, around October 29th to November 8th, somewhere around there, we're going to enter into new healthy territory. Do I have any other questions about this crypto? By the way, the last time we had a very strong up move, we did not have a selling campaign. So I'm not apt to believe this one is being shorted by professionals. If anything, the professionals may be trying to buy this. So smart or informed traders, as some would say, are buying this. Let's put this in a little report. October, what's today's date? 16. Short for what, Shimmer? Shimmer, yeah. This crypto needs more healthy structure. Perhaps after the breakout of the current watch line above 0.003 minus, okay, if it phases through at the current price from October current price by October 31st to November 8th, 2024. I see in the data, in the VSA data, that it appears to be in a small buying campaign. Therefore, I would not look for this crypto to be low for low long term, but rather expect higher prices in the longer term future. I still want the breakout though before touching this yet, as it is also small accumulation. I also see a lack of a selling campaign at the tops. So this means it is not being actively shorted, dumped or shorted. This is good for a crypto that may be healthy one day. Okay, so this is really good for a crypto that might be healthy one day. It's not healthy right now as far as being in the downtrend, but we can see that professionals getting involved. So there it is. Any other questions? This crypto. All right. I need to copy all of that because I was doing this on my tutorial page, not the actual page. There we go. Now I'm going to look at USDT.D, and I'm also going to look at that total 3. All right, for USDT.D, we are still in this uptrend here. It looks like our current candle may be getting us starting to go below this line. See that line that right there? We put a red line, a red circle underneath it. If we get structures below here, what would we be looking for? Did anybody remember if USDT.D goes down, what that might mean for the crypto markets? Correct, Lisa. It would be telling us it's very possible we may be looking for higher prices. So if we go here, our next stop along the way is going to be, we're going to move this up the track a little bit to 14. So as time goes on, remember this number goes higher as time goes on. So to calculate that, if I just take this current candle and I bring it down to that line, or sorry, the target, and I bring it down to the line, it's right here at 4.19%. So at the moment, if we clear this area, the next that I have on my track is around 4.9%. Now, if I need some closes, I would like some closes. We got 4 days left for a big close there, personally. And then I want to have a reason why I believe it's going down. But if we do get some structure below here, especially if over the next month of October we come up here, we might be experiencing a bullish October. Or if we go out up here over the month of October, we're still going up, but now on the underside of that line, then I would experience a bullish December or no bullish November. Okay. But as it is, just getting that close is the first step to that process. Okay, so now let's look at this in terms of VSA. I'm going to hide my lines real quick to simplify things for us because I want to look at this in terms of VSA. When I pull up the volume, show my indicators, and I want to hide drawings. Okay, all right. So when I look at this in terms of volume spread analysis, it's quite simple. Let's break this down and see what the professionals are actually doing, okay? And then we'll read it, because if we can read it, we can understand what they're doing. And I think this is a great example for us to be able to use when it comes to the rules. I'll make a duplicate chart, okay? So at the moment, we can see ultra high volume where in relative to the candles during this down move. We're looking at this relative to the flow of price, as we learned from our lessons. Okay. As price is coming down, we're experiencing ultra high volume followed by a reversal into healthy territory. So this tells us there was actual accumulation in this zone. So let's edit this and we'll block it out. Okay, so there was a strong increase in volume here as price is falling. And remember from our slides today, that's going to be telling us professionals are getting involved and professional buying has to happen. So this means they target this one to primarily go up. Now this would need confirmation as the flow of price from a sword method perspective. We would want to draw our watch line, which would tell us that there might be health somewhere in this area. Okay, so here's our sword cut at the break, and there's our energy center that just happened to be right at the sword cut. So we see accumulation, and then at the second area of accumulation, if it is accumulation over time, would primarily be either in this volume zone block, which was here. Okay. Now if we stretch out that block and move it to the side, we're still within that block for the second accumulation campaign, which may happen at sword cut or close to these lows. So we would be looking in two areas for the next health to appear. We would be looking for here, which did not happen. We would be looking at sword cut, which did happen. Okay, both of those situations we'd be looking for. Health can help us determine the next area which price we might expect for a bullish trade. In this case, it was here. So our first bullish trade might be here. Our second bullish trade one might be here for thinking about this going up. Now remember, this is a little bit of a harder concept because USDT always tells us the opposite of Bitcoin. So if this goes up, Bitcoin should be falling. And sure enough, Bitcoin, this was falling around 2020 June. What's this? No, wait, hold on. Around May, looks like around May of 2021 and May of 2022. Now in ChartRoom, we've always had a really good track record with USDT.D. Primarily, we can really track the biggest movements on USDT.D. But using volume, we can take it to a whole nother level. So what was the last thing that happened? Let's answer our questions from our slides today. This is a very big lesson, so you might have to look at it again if you missed it. Number one, are the major market players involved? What have the major market players done so far? And number three, what are the major market players doing now? So are they involved? We can see some type of campaign going on, so they are involved. What have they done so far? It looks like they were accumulating this USDT.D. And then what else? What are the market players doing now? We have to answer that question. So this happened on an up move or a down move? It happened on a down move. Okay. Now we looked at the first move, price was falling, increase in the volume, followed by an up move. Partial evidence that price is being accumulated. Next, we have another down move. What is the volume doing in that area? It is rising again. See? It's rising as the price is falling. So price is falling in these two areas, and we got volume increasing on the down move. Accumulation. First accumulation campaign, second accumulation campaign, and this zone block. Now, do we have another down move? If so, show me where it is and show me somebody explain what is happening now. You guys show me. Okay, draw it right on my screen. You guys get involved, because if you know this, we can read the future. Use the zoom annotate feature if you're live in the class. Okay, Lisa drew a down move here. There's the down move. Okay, good job, Lisa. Now, in addition, Lisa, what is the relative volume? It is this area here. So what is the volume doing in this area? She drew an up arrow. The volume is rising. Is this consistent now with what the professionals were doing in USDT.D? Is it consistent? Yes. Okay. Yes, it is consistent. It was falling, they were doing something. It was falling, they were doing something. It's falling again, they were doing something. Now it fell, and the time that it fell was from June of 2023 all the way to around May of 2020 of this year. So it's actively being targeted, therefore, to on the down move. So they are accumulating it. So this is another example of accumulation. So we have accumulation number 1, accumulation number 2, and accumulation number 3 for USD.D. If it's accumulating, let me ask you a question. We haven't finished, but I want everybody to just take a moment and think. You guys like cryptocurrencies, right? We trade cryptocurrencies. However, USDT.D tells us a lot of information, but let's just put that aside. If this is being targeted, which direction do we think this USDT.D is going to primarily go in the future if it's being accumulated on the down move? Up or down? Longer term? Up. That's right. So longer term, this is primarily going to be going up. Now let's put that in context. When Bitcoin goes up, USDT, or when USDT.D goes up, Bitcoin goes where? Down. So now let's just write that off to the side. Okay, let me put this in white to wrap our minds around this. Number 1, we can see from the data an active campaign. So we establish fact number 1. We're like lawyers or doctors, right? Sit and we make information, facts. We lay it all out and then we see where the chips fall. Okay? Not campaign. Number 2, when accumulation campaign. This means overall USDT.D is expected longer term to move up. Number 2, when this chart moves up, Bitcoin moves down. Therefore, number 3, conclusion. Therefore, we can conclude that Bitcoin at some time is expected to have much lower prices. Okay? Does this mean that there would be a flash crash, zero prices, a season where Bitcoin's trading at 10, 11, 13,000? Personally, I believe so, especially when you consider that unless Bitcoin changes its model, all it is a store of value. It's not used for its utility. Is very expensive. The more expensive Bitcoin goes, see, people said this is what they said for years. Oh, you can use Bitcoin to buy coffee and things. That's the wave of the future. Wrong. It's very expensive technology. The more mining, number 1, is very costly for Bitcoin. It's very energy. It uses so much electricity compared to the mining of other cryptocurrencies. It's a dinosaur, according to some. It's a dinosaur in the technological world. It is one of the oldest, and it hasn't changed. And they said, I remember that one guy, he cusses a lot, unfortunately. He said, you could take it and you could take Bitcoin and change it into the technology, but it's like taking a Model T Ford and changing it into a Ferrari. Why don't you just buy a Ferrari? It's more work than it is worth it. The mining, I saw videos of bulldozers just running over fields of mining just because they're trying to destroy them all, because it's so expensive. That's why it's better to use Ethereum. And Ethereum was the prototype for this. Bitcoin was like a prototype. Ethereum was the first rough draft, and XRP's ledger is the wave of the future because the ledger is very cheap, electricity efficient. The data shows that this is almost known. Sometime in the future, we're going to be expecting this to go higher because it's being accumulated. That's their time when they're trying to do this. All right, now I'm going to ask you another question. Okay, I'm going to duplicate this one. Okay. If it's being accumulated, and I'll duplicate this image here. If it's been accumulated, is it time for it to really rise right now? During this last move up, Okay, this move up. The volume was about here, and here we can see a dissipation in volume here. Is this an active selling campaign? I'm going to show you, and we're going to get more into this in the coming weeks because I have it to teach you guys dissipation. Where's it at? Yes. I'm going to be teaching on, I already talked about panic, greed, fear, volume block, macro increasing, effort versus, we're going to be getting into continuation and dissipation, and then micro increasing and micro decreasing after that one. Okay, those are going to be, that's next on the menu. Not today, of course. We're already over time. But I will explain in brief, since I've been asked to give my opinion on the overall market. From a data standpoint, I hope this blesses you. So we already talked about the accumulation that was happening on here. And to remind ourselves, we're just going to put the A's here and here, okay, from these down moves. Got it? We know that. We found that out. However, what now about these up moves? So here's the up moves. 1, 2, we got 3. This one's, remember as I always speak about that clock? This is that. Okay, this is how that looks. See? We first move up very sharply, and then semi-sharply, and then almost horizontally after a while, right? So this is that. Anyway, we experience 3 waves. We can look at this in relative volume. From a volume block, it's probably going to be within this segment here, relative to the first volume. So let's look at what the volume's doing in this first area. So if I was just marking it off, I might be looking from here to here. So let's do this together. What is volume doing primarily from this zone here to here? What is it primarily doing? Somebody pointed out to me. You guys see it? Somebody say it if you see it. Primarily. Not the exceptions, but what is it telling us? Increasing or decreasing? Decreasing. Easy, right? Yeah, you guys got this. See? So we can actually see that the volume's decreasing. Now we learned from our lesson that I taught you guys today that in a decreasing market, so increasing volume, rising, increasing volume, where is it? See the falling flow, okay? We remember in the center paragraph, I said this. Decreasing volume during a down move highlights possible lack of professional activity in an area and the lack of supply or bearish activity, or lack of bearish activity, I should say. Price may reverse or correct. This can help signal a reversal. Are they really in an ad campaign to sell this or distribute it at the moment? The answer is no. But remember, without professional activity or professional involvement, prices can't sustain this. However, if it's already being accumulated to go up, it just means that they're not ready for prices to go up high. They want more. So they don't want to just let prices go up too far, okay, or they don't want to just buy somewhere too high. They want to pull it back, which means that any move down is going to be a correction, okay? So they really want it to go up high, but at the same time, they're not helping it push it high by getting too involved, by throwing more money at it to create buying frenzies. They're just actually not getting so involved. So it makes sense, therefore, that this move down here is a temporary move. Now, in context, that means, and I'll do this again, but if this is falling, Bitcoin is rising, which means the context is that the temporary rise in Bitcoin, which we've expected, which we've known about, which we've tracked the range, that's why I told you the last prices was around 66,000. We're at the top. It's temporary, okay? All that move high was temporary, but since they're accumulating it, they're not wanting it to go so high just yet. Now, knowing this, I'm going to show you what it means in just a moment on what it relates to today. But just so here, right here, we can see that they are neutral or not involved. All right, what about the next move up? We're going up higher. Are the professionals dumping it? Are we seeing a strong increase in volume? As I've explained in the first paragraph, looking for that increase in volume. Increasing volume during a down, we need to go to the rising one. Rising. Yeah, rising. Increasing volume during up move highlights possible professional activity in the area. This energy is needed, but too much unusually high volume may be a secret signal, a secret distribution campaign. Decreasing volume, meaning when price is decreasing during an up move, highlights possible lack of professional activity in the area. prices may not continue this way much longer without energy from professionals. So are we seeing a strong increase in volume as we're going up higher? No, we ain't. Look at the next area. Let's mark it off, about from here to here. And if we were to move that volume block, it'd be from, again, here and here. So if I look in this second area here, this area, what is the volume doing from here to here? Come on, you guys see it? It is falling. Again, it's decreasing. It's the same. So we're not seeing a strong increase of professional activity. We're seeing a lack of professional activity in the rising flow as price is rising. Okay, if we were seeing them actively trying to short it, we would see an increase in volume. So right now, things just need to cool down. And finally, this third move up here, we're moving up higher. What is the volume doing in this third area? Let's mark it up. You guys want to know the secrets to the market? I'm giving you the secrets to the market. You guys don't need a prophetic to reveal this, although it's really wonderful when we combine it prophetic. The Lord has also given us wisdom, and we can be not ignorant. Volume is decreasing. Are there some outliers? Sure. Were there outliers here? Sure. But the flow, the average, reveals a lot. This is the macro view. Okay? So as we're coming up, we can see they were neutral here and neutral here. They're not getting involved. They were actively buying, and when we did rise, they were actively, just without professional support, we start mushrooming over. Okay, we're not really going anywhere, not going anywhere. They're not really shorting it, but they're also not getting involved. They're neutral. Okay, so price comes down, and then, they're like, yes, let's get some up. So they start buying once we start getting into some of these old zones. From a structural perspective, we can view that like flat, but this is actually what's really happening. Okay, so now we did 4 points. We did 1, 2, 3, 4, 5, 6. 6 points. We have one more to go. Uptrend, downtrend. It's easy. This one is we have an uptrend. And now we also last left off at accumulation. Now as we're going up higher, I want to see what is happening with the volume. I suspect that as we were going up higher again, especially as we get to this volume block, we may be experiencing some of the same things that we happened last time. Okay? If they really want it to come down for a longer time, we're going to see them short it. I didn't see that happen. I didn't see them really try to do anything. I just see them take their hands away from it, and then prices naturally fall until they're ready to buy again. Now, from a volume perspective, VSA, somebody tell me, what is the volume doing? Tell me when you see it. Increasing or decreasing? Decreasing. We've got a few D's on the screen. Decreasing. The flow, ever so slightly, is another decrease as we're moving up, which means this is another type of neutral. If we saw an increase in volume, we know they're actively targeting it to come down. But what we see instead is just a lack of involvement. Or what happens, can prices continue for long if the professionals are not involved? Can the prices continue going long for too long if the professionals are not involved?
No.
That's right. No, it can't. Eventually, weakness starts appearing. Now, from a structural perspective, we can draw it if we wanted to. There's sword cuts, and then there's your next weakness. Here would be weak, weak, and then weak if we were looking for entries. From a structural perspective now, though, price is rising, but without professionals really helping push it along, they're actually exiting. What does that tell us that they really want? What do they really want? Anybody know? What do they want? Therefore, we'll put it together. What
Down?
they want to, I wouldn't say they want to bring it down, but they want lower prices. If they really wanted to bring it down, they can short it. Right now, the market's so much in their favor, all they have to do is take their hands off the wheel and it will do it. Let me give you an example. If you're driving a car and you're driving uphill, the hill is up. All you have to do is take your foot off the gas. Eventually, it's going to slow down on its own. Eventually, it'll even reverse position if you're driving uphill. Meaning, it tells us a lot of information. We're going uphill. We're going against a trend. Okay. Now, sometimes if we were driving downhill and we take our foot off the gas, sometimes we can then sometimes we're just going to coast. But if we put our foot on the gas, we're really going to speed down that hill, right? This is an example of us going uphill and they put their foot on the gas. They take their foot off the gas and then we immediately slow down. So that tells us a few things. It tells us that it's not natural for the car to be moving uphill. It's not natural for this crypto to be moving up, okay, for too long. It needs that professional support. So even that's going to end at some time. It tells us that right now we're moving up, but they're just taking their foot off the gas, and last time they took their foot off the gas, we fell. So that means that all they have to do is take their foot off the gas, and you know it. Okay, we have evidence. They just took their foot off the gas and price fell, and they were actually buying. Here, price is rising. They're actively taking their foot off the gas. What's going to happen again? So you tell me what's going to happen again if they take their foot off the gas. Anybody? They take their foot off the gas, prices slow down, and eventually fall. We're going to start rolling down the hill again. And they want that. Not that they're actively targeting it, but they want lower prices. Not that they want to bring it down. If we saw them wanting to bring it down, they would be actually campaigning to distribute it and short it. We don't really see that. They can, and they can manipulate it, but right now, by and far, the average or the general of what's really happening is they're targeting, they're actually buying it. But right now, all they have to do is they're buying it, they're accumulating for longer term, but right now, they don't want the higher prices. Even though they're buying, they don't want it to go up right now? No, because think about how much they're able to buy at these chunks. Think of how much they're able to buy at these chunks. And think of how much they're able to buy at these chunks. This, my friends, is what we taught today. I'm going to draw it for you. You're going to see it. The volume block. When it's in this block, they're accumulating. They want it low because they want to keep it as much as they can buy. They want to buy as much chunks as they can. Okay? Not that they're targeting it down, but they want it to fall. You know? They're wanting it in these areas. So anybody who could read this, like Lisa, saying they want lower prices, she's right. Number one, if we were going to go up higher, we want to have the big push in health. So, for example, let me show you where it would be. Let me show you this, finish my current thought. From a structural perspective, they're not targeting it down, but it's almost just as bad for us to observe it. We are going to see this, therefore, eventually, most likely, enter into weakness. And when it enters into weakness, it'll come down. Now, from a smaller perspective, is it possible to observe some selling here? Possibly. We'd have to go back, but to a smaller time frame, like a daily chart, maybe a 12-hour, 6-hour chart, and then we can look to see if there's any active campaign to push it down or some selling. I do know the candles are looking like closes near the middle, and we're seeing those back-to-back candles, reversal types, at the tops. It's very possible. From the ChartRoom perspective, we've already drawn that. I showed you guys the image for that with the trend lines. It's here. But this is why it's such a big deal. Now the bottom is already here anyway, structurally around these prices here, 3.5%. My reports for the last few months is that, for the last year and a half, I think it is, that we're looking to get to these lower targets anyway, closer to here, which we already hit one of them, and the other one's a little bit lower, the swing target. So I'm expecting to get down here anyway, which is close to the volume block, which where we identified they're accumulating. The current trend is that uptrend, and the weakness is already revealed here. Currently this week is a close. So let's put it all together. The facts. Now that we examined everything. Okay? Add text, facts. We're on a fact-finding mission. Facts. .d represents often the entire market because it dictates a majority of what Bitcoin will do. And Bitcoin has the largest share. If you don't believe me, pull up those one screens and it'll show you the whole market share, and the Bitcoin has the largest square on the whole board. We observe the accumulation areas. We marked this with an A. We also noted the up moves did not have an active selling campaign or a major selling campaign. Put major. This means that without professional participation, the market here falls. The market here falls. Okay? No major pressure needed. This also means that we can use this information to our advantage to predict the future. Overall, they want this to go higher, but they are not ready. They will let price fall, price here fall, then accumulate again at lower prices. I suspect, according to our map, (3.57%). All that is needed is to hunt the up move, which we did. Okay, now I'm going to make this a little bit smaller so I can fit everything I want to say here. I said I was going to do total 3, but I'm out of time. I've been here for too long today. Okay, I think that's all I can fit on there. For some reason it's going slow. Why is it going slow? What you did. Okay. All right, I'm going to save that image. Okay, I'm going to do one more. Edit, add text. In conclusion, I believe this next major move is not far in the future. That move is down for USDT.D. Then that means a strong up move for Bitcoin. Then I expect this to reverse closer to 3.57% and price of Bitcoin to fall longer term. So longer term, this is going to go up. Not right now, as we showed you in the images, but longer term, it's going to go up. A new watch line will be drawn after the next time price falls, and that will be above here, those ones here, as it nears the bottom, as I should say USD10, as USD.D nears the bottom, possibly 3.5%. This is how we're going to do in wealth transfer, guys. 3.5%. Look for this to reverse and Bitcoin to fall in a major way. Now, what I'm about to say after this is going to scare some people, but it's the truth. Okay? I'm going to say something that's going to be real scary. Okay, in a major way. That will be a prime time to short. Till then, look for a BTC coin rise to higher prices, possibly 70 to 80K, maybe even 100, according to the map. We'll have to look at I'll just say higher prices because we'll need to consult that map. Could be 100K, we'll have to see it. I'll look for prices to rise, then a major crash in the future. Okay, so what I'm about to say is going to scare, but I think I'm going to have to end here. So I won't do total 3. Maybe we'll look at that on Saturday together. And I'm going to put the date on here, Daezong, October 16, 2024. Okay, what I'm about to say is this. Yeah, I'm recording this. Okay. So when this chart falls, it's going to create a buying frenzy for Bitcoin. People are going to be very bullish Bitcoin. But we have to remember what they're doing. Okay? We have to remember what the campaign is. Sorry, this one right there. We have strong evidence that their campaign is eventually going to be up. So what I'm going to say is this. Some of you are new to VSA. Some of you guys have been around the block a little bit. You know that in active buying campaigns or active selling campaigns, when price reverses, it can reverse very quickly. And it seems like it happens out of the blue. Now, normally this would be really good because it would look like if it's buying, and then price falls and we have one more buying, which I expect, then price can shoot up almost out of nowhere. But we got to remember, The scary part is this is the opposite of the Bitcoin. When this one moves up, Bitcoin falls, which means they really do want higher prices one day. Not yet, because they're just taking their foot off the gas. They're not helping it do anything higher. But they are actively accumulating, which means they want this to go higher. When this rises, when USDT.U rises, Bitcoin falls, which means they actively want Bitcoin to drop one day. Now, right now, if we are getting closes below here and the next weaknesses ensue, we're probably going to get that next accumulation as we got here and here. It's all the volume block that we're looking for it to happen. I believe it's around 3.5%, which is somewhere here. It could even be lower or some spikes below here. I wouldn't be surprised because we have spikes on the top. So if we do get one more, and it's a parabolic, by the way, the larger parabolic, you guys have seen this. Let me just remind you. This is the larger parabolic. This is the top. This is the bottom. So that puts us around the 3.57%, which is around here, which is closer to our target, which we already hit one of them, and the other is the swing target. All these areas. So if we're going to get any bounces, it's going to be as prices comes here. Now we're going to slow down at 419, and then we may have one more move. But below there, we're going to get here. If we do it all in one fell swoop, which I believe it's going to happen over time, then we're going to be here. And when that happens, because we already observed what they were doing, we know that this is going to rise. It's a fact. They accumulated. So when they buy, it's going to skyrocket, but this time out of the blue. And it's going to seem like, what happened? You think this is bad? No. What's going to happen is much worse, especially if they're able to accumulate over a good time. So the fact is, they're actively doing something. They want this one to go higher. When this one goes higher, Bitcoin is going to fall out of almost the blue. The problem is the range between here, okay, between here and here is quite a while. It's quite a big drop. Okay, this range is quite a big drop. And that means there's a lot of money to be made on the table. Bitcoin's probably going to be sitting 100K, here maybe about 70, 80K, here maybe 100, 110, 120. It's going to be sitting somewhere high and somewhere pretty, possibly. It can happen quickly. Look how far we, just take this last range. This was only over the course of January to March, so about over a month and a half. Look how much we fell. Now look how much we have left to fall, and you guys tell me. Can it happen over a month or two? Absolutely. It can happen even sooner. But that's approximately the time it could take when it does happen. I just showed you, look, okay? That's the exact same distance to we hit support. So Bitcoin could be sitting at another nice and pretty percentage, and then if there's one more active campaign, or if there's no demand, a no demand situation, which is super low volume after the campaign has happened, meaning we're at 3.5% and the volume is going to be like way down there. That means that there's no supply. They have no choice. It's nothing left to do anymore. There's no more stock to buy or large floating supply. The majority of the large floating supply, which means price will be rising. We will draw the watch line, which is a trend line from here to here, and it's going to reveal in the future where that's confirmed at to go up. But we'd probably rise, hit that, slow down, and then come up. If we see a volume push on top of that trend line, and I'll be here, I'm here to watch it, and I'll tell everybody, all of you guys in ChartRoom. If we draw this trend line and I see a push in volume past that trend line, I know they're actively want it to go up at that time. Here, they don't want it. We can see it. They're just like, no, let's let it cool down. Take the foot off the gas. Then they're going to join in that to create the selling frenzy. They're going to actively dump some of their holding just to sell money. It's like how advertisers sell to make money, but they also advertise. They spend money to make money. This will be to keep it going. And we'll see that at that time after the health is broken. So we're going to be talking more about that, called pushing volume and VSA in subsequent chapters. Do I have any other questions for us? That tells you more to the story. Last time I gave you all of the map. Now I'm giving you the VSA data. It matches the map. 3.5%. Look, I have it so big and bold here. I've talked about it for a long time. 3.59 to 3.4 area. The reason I say short term is because the up move is not in alignment with the larger move on the weekly chart. I see price moving down towards 3.9. If there's a down move on BTC based on this data, I don't see it lasting more than a few months. That was back in June. Any other questions? Praise God.
Bitcoin is at 67.8.
Mm-hmm.
Is there any way we could glance at the chart
Yeah.
and just compare with the USDT?
Yeah. There was your last structure here, 65, 66, that's the total. Structures on top of here. You get me on top of here, then we can talk about going to a higher place. We can DP projection it out, taking the distance.
We can't see the map.
What about now? If I DP projection it out, taking the distance from here to here, let's make it solid. We might be looking for some slowdown closer to minus 80, 83, depending on how many weeks it takes. Okay, I'll take that image here.
Chart?
Yep.
Should we close above that line?
I would like to close above this chart since the weekly's been pretty strong. So I really want to get that close above those areas. The rejection was very minimal at this area. So if we do get some more closes at there, then I'm still going to be looking to come down when we have more time. We'll probably hit the vortex of 52. But if we get some solid closes, especially if we get structure afterwards, I'm going to be looking to hit possibly the lower 80s, 83 to 80. From a volume perspective, real quick, let me just see what the active campaign is. There was an active campaign to buy here. You guys can see as we're coming down this move, the volume in the relative block was very much of an increase from the base, has the basic price flow. So they were actively accumulating on this down move. So it would behoove us to also look to see if there was from this last down move, active campaign to accumulate. Was there? We have the down move. Okay. Did we get the increase in volume? So primarily, I would say yes. Here's the down move. Here's the down move. There's an increase. There's an increase. It's on the down move. It's on a white bar, but look at the candle. It's a candle that was testing the market down here, closing near the middle. That one. I'm going to say yes. It was accumulating. To the degree of the first one? No, not even close, but something. I also want to look at the converse, because this is being a little more traded closer to the chest. Was there a selling campaign or distribution at the tops? In our previous up here, we rise, the volume's getting very strong, ultra high closer to the top, and then we have a down move, ultra high volume, followed by a move to the side. Then we come back up to this area on no demand. So in other words, we went up here and the volume was increasing. Then we come up again and the volume was almost nothing. So there may have been selling, and then because this is either going to be one of two situations, it's going to be it's going to be either a no demand situation or just a neutral. Let me see if I can show you my full screen. There we go. Yeah. Or just neutral. So prices either way fell, most likely because it was being sold, pushed to the downside, and then the accumulation. So they were accumulating. They wanted to be higher. It was higher. Then we get to the top here, and there's some selling. So they want some lower prices on purpose. So this is where the big difference between Bitcoin's being pushed up and pushed down. But primarily a winner emerges. So here is going to be some active selling, possibly, because a strong increase at the tops, followed by moves down and moves to the side, downward oscillation or downward movement. But as it's coming down, we're starting to buy again. So which one's stronger? Right now, the selling is still stronger. So does this need more accumulation? Possibly needs more accumulation, which means I'm not going to be so convinced to jump on the bandwagon for Bitcoin higher prices right now. I want to see a stronger accumulation, especially down here. Now, when they tested the market down here, the volume was much higher than it was. So it tells me there's still a lot of market here. That gives me an opinion. I'm going to say I'm going to be expecting lower prices, because if they're buying it, they're probably going to want those lower prices that they know there's a market for. People are going to be willing to pay 52. And if they are actively buying Bitcoin in the last campaign and they want to do it again before a big distribution, before a really big selling, then they're going to want to buy at as many of those lower prices as possible. So where would it be? Possibly along this track, at the vortex, at 30 prices. I already showed you at that 52 price, there's a market there. From the volume, we can see that. Number two, along that track is where the next likely place would happen. So if I saw a major selling happen, I'm going to be thinking that's the case. If I just see a slight, I need to go say that again. If I'm seeing a major accumulation happen, but no major selling distribution, then I'm looking for them to accumulate again. So right now, I see a very small selling. Down move isn't even a strong down move. It's just that, right? But I do see the increase in volume. So I'm going to say wait. Okay? Closes for me, it could be, but I think I need to wait. I'm probably going to see lower Bitcoin, 52. And then if I see the strong accumulation happen, I know that's going to be the big pump. From a weekly perspective of the Bitcoin and USDT.D, I wouldn't use this close just yet, saying that, hey, this is going to go down, Bitcoin's going to rise. If it is, then that's probably going to take precedence. But as it is, we're probably going to see us go up one more time. Bitcoin probably going to fall one more time, not change anything to the story. One more accumulation, and that's going to be my big pump. When Bitcoin gets that big pump, and it starts hitting these 80s and higher numbers, then I know USDT.D is doing what it's supposed to do, and that's going to be coming down here. And then we're going to be looking for the reversal. And then we're going to see a big sell-off. Now, right now, that sell-off has not happened. What was the last things the professionals did? They were entering on Bitcoin, at least on this, in the index. They're entering. So where's the big sell-off? They haven't happened yet. So am I expecting Bitcoin to crash right now? No, it's not time. All of that together tells the story. It's not time for it to fall. That time will come, and it's going to come. We can see the storm. We can see the clouds on the horizon, but not yet. So I'm not waiting for an overnight crash on Bitcoin. You guys see that? Not yet. At the most, we're going to fall to maybe 52, 53. But I want to see them, if they're actively buying, I want to see, if it's going to crash, I'm waiting for them to see that sell. I want to see the major sell. I want to see that look just like this. And this will be the last thing I see. See how we went up here? I flipped the chart upside down. If I start seeing that strong increase as we go up, then I'm going to be looking for a big crash. I don't see that right now in this last move. You understand? So that's why I'm not looking for the big crash just yet. It's on the horizon, but that's how we can predict sometimes a month out. Any other questions? All right. My time is up, my friends. I've been with you guys for a couple hours now. If you missed the word room this morning, listen to it. I think I included our testimony, what the Lord did for my son. I'm so happy. Listen to the testimony. Listen to the word room. May it bless you. We'll be back next Wednesday with more tutorials for VSA. I'm going to be going and covering over the dissipation of energy. And then after all of my explanations on the macro, I'm going to get into the micro. We're going to talk about the compression in the candles. And then I'm going to show you guys the volume candles, how you can use them if you want to. We're going to have more in-depth examples now that I laid all the framework. If you want to re-understand some of these concepts, just listen to them again. You can also pick up a few books on volume spread analysis. There's quite a few online. I like the works by Gavin Holmes and Tom Williams, although it's very difficult to read. Some teachers are a lot better than others. A lot of things to learn. It's a language. I sure do love you guys. You guys have a great day, okay? And we'll be back for ChartRoom on Saturday. I'll do requests then. And a total 3. And any requests you guys have, just shoot me an email.